From March 30, the euro was mostly dropping. As a result, it lost more than 3% of its price. It's obvious that the depreciation was mainly caused by the greenback's rise. As a result, any trend has rebounds and corrections in its structure. But the euro did not display either phenomenon for almost 3 weeks. However, yesterday we noticed a long-awaited rebound. Today, the euro is gaining in value even more rapidly than yesterday. The single currency was boosted by the Eurozone industrial production report. It unveiled that a drop of 1.3% was replaced by a 2% jump, whereas economists had expected a rise of just 1%. Nevertheless, there are no grounds to say that the US dollar has finished its uptrend. The euro is showing just a local correction. The stance chosen by the Federal Reserve and the European Central Bank is the main market driver. While the US Fed has already started hiking the key interest rate, the ECB remains stuck to its previous policy. In addition, the industrial production report is likely to have only a transitory effect, as it reflects the situation in February. There is no doubt that in March the indicator will tumble. On the British pounds chart, we can see almost the same picture. The only difference is that the pound sterling began falling a bit earlier, on March 23, depreciating by more than 2%. In other words, the magnitude of its drop initially was smaller compared to the euro. What's more, the UK macroeconomic figures could hardly support the currency. Thus, there is no wonder that the pound sterling is manifesting a less significant increase. Nevertheless, the US dollar may soon resume gaining in value, thus pushing the euro and the pound sterling lower. Let us examine the trading charts of both the euro and the British pound. The euro-dollar pair rebounded from the support level of 1.08. Nevertheless, the market sentiment is likely to remain bearish in the short term. Although the pair broke the support level, trades need some signals to prove this auction. If the price settles below 1.0750, traders will start considering short positions. Until then, the pair is likely to remain stagnant or show a rebound. Meanwhile, the pound-dollar pair was hovering near the support level of 1.30 for 2 days in a row. This movement pointed to uncertainty amid traders who expected a further decline in the pair. On the daily chart, we see that the greenback has fully recovered after the recent downward correction. As a result, stagnation near the psychological level was replaced by a local rebound. The jump did not violate the structure of the downtrend. Once the price settles below 1.2950 on the 4-hour chart, traders will receive a sell signal, which will indicate a continuation of the midterm downtrend. And that's all for today. We wish you profitable trading and waiting for you on our channel with a new video tomorrow. See you!